And welcome to another live stream with me, Christian Rauchenwald, on this mediocre first day. But I hope you all had a great week so far. We're gonna jump right into it in a second. As usual, we'll just have to get the disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way professional or financial advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. That said, as usual, all the tools that I'm using, so the broker, charting software, strategy I'm following, and so on, is all linked in the description down below. And you can check out the one thing I recommend usually, the Elliott Wave principle for free. So if you follow the link in the description below, you can read that online for free or get yourself a physical copy. With that, let's jump into it. Hi, Olga. Great to have you here. And hi, everyone else that's lurking in the background. Where do we start today? Yeah, so let's start by getting the notifications out of the way. Changes in volume for Greenwave. Yeah. Okay. Known has what? It dropped by 7 cents. Okay. Yeah. And no has earnings upcoming. Okay. Good to know. Okay. So. Yeah, where do we start? Let's start with our usual candidate, GameStop. Did we have any noticeable movement yesterday? No, we didn't. Maybe zoom in a little, but yeah, nothing's changed from what we had yesterday. So we're still waiting basically either for the $15 mark to basically hit the 61.8 expansion level and the 78.6 retracement level to finish a potential wave C down here, or for a breakout. We probably already have the breakout. No, yeah, we probably already have a breakout from here. Yeah, so still think despite, let's add a trend line here. Trend line. Despite the yeah, I mean, we definitely had the breakout here, yeah. So despite that breakout, I still think, unless we draw the line differently, so if we take really the high points here, then we will only get the breakout here, yeah. So that, like, one could argue, technically that would work, yeah. So, but I still think, as said, there is still movement down to come before we go further up. So, but overall, we didn't have any big movements other than this candle here. And we'll just wait for things to go a little bit further now. We still have the markets are now open. We still have the calls that expire tomorrow, or the covered calls that expire tomorrow. So the ones that we wrote. Technically, I mean, if I close them, now, the maximum profit would be, I mean, it's really not that much. It's $15.20 times 5. So it's $76 for the week. If we wait till tomorrow and we close under 30, which is very, very likely. And then depending on where we close, the price that we, or the money that we get for selling $30 covered calls for next week may or may not. So anyway, will change because the time is 1 day less, so that already affects the value. But on top of that, it also depends on where the price will be. Question is, if I sell them now, what will we get right now? Mid price would be 18, so a little bit more than what we got for this week overall. Although right now we would only realize around $11. Let's see what's the best thing here. So if we sell those and then have to buy back those for tomorrow, and then do that 5 times and use the mid price for 15 credit. We post that for 20 credit, then that would work. So yeah, transmit that, and then we can remove that one here.
Order cancelled.
So we basically say if net we get $100 for closing out our current calls and selling new calls, then we'll do it. If not, then we wait for them to expire tomorrow, and then actually shortly before the market closes tomorrow, I would then write the new calls for the 16th. Yeah, that much about GameStop for now. So I think we're going down, which makes it less likely that the trade will trigger, but it's still possible that we have some ABC movement going up first, which would increase the premium, which would make it more likely for my trade to trigger. Yeah. Then do we have any movements? Barnes & Noble Educational is slowly creeping up, but we don't have any strong movement. I still think it's possible that we had an impulse up here and that we finished our correction down here and are now in the next impulse, but only time will tell. CrowdStrike still recovering, likely developing the ABC corrective pattern before we get another push down. Faraday Future relatively unchanged, although we are edging down a little bit. So, but the question still remains the same: is that already our ABC correction? From here we get the next 1, 2, and wave 3, or is that wave A, wave B, and then wave C down, or is that wave A, wave B is not finished yet, so wave B would be A, B, C, and then we get wave C down. So basically there are two scenarios where we would have one where we would have upwards movement that would eventually go higher than this, one where we would have upwards movement into the area here, and one where we just go further down before we eventually go up again. So yeah, like the flexibility of Elliott Wave Theory and the complexity of corrective wave pattern is really not great to get us a definitive decision here or a definitive pattern. GameStop we covered, green wave. Yeah, so like, yeah, just wait and see. No valid pattern. Immersion. Gonna be interesting in the next couple of days because we will see if this turns out to be the next wave 1, 2, and wave 3, 4, 5, so that we finish the corrective wave here at the top of the base channel, or if there will be further corrective movements first. Oh, no, now actually, oh yeah, like, so that's bad. Should have set a stop loss. I mean, I don't have a lot of shares. It's a tricky situation. So on the monthly chart, it's still possible that this is wave 1, wave 2, and wave 2 maybe not finished. So there we would have room down till 10 cents per share. However, if we look on the just on this part here, we already retraced almost the full amount. So the starting point here was at 20 cents or 20.7 cents. And we already went down here to 21.31. We broke through the areas that we had here. So the potential, what did we have now? Was it weekly or daily? Weekly. So through the areas that we had here as a potential turnaround point, and basically for wave A, B, and C, and therefore unlikely that we have a valid pattern here left, or basically, so like that this here is an impulse followed by correction, followed by the next impulse, but more likely that in that case, the correction hasn't finished yet and that we will go below the 20. So we should have set a stop loss here. So, but I only got like $60 worth of shares. So sell, position, and submit. So we're gonna get out of that position. Okay, let's do it like this. Do we get that to fill? Okay, no, filled. Okay, so we took a small $20 or $17, $18 loss here. But point is, the pattern here, unfortunately, it's still possible to turn around. Theoretically, we can retrace like 99% down here to still have a valid impulse and a correction. But since we also went through those levels here, relatively, let's check daily chart. Yeah, so relatively quickly, so we really gapped through. I think we might have further downward movement. 500,000 were sold right at open, yeah. I mean, with earnings upcoming, of course, there could be a spike in the other direction. But if I just use Elliott Wave Theory, and again, the amount I had invested was obviously ridiculously low. But if I use Elliott Wave Theory, the fact that we went through this like very often just means that we will actually break further through, and that the pattern here isn't finished yet. And so, like getting out of here for me now just makes more sense. Now for you, since you already hold since 21, if I recall it correctly. Obviously, I don't think it makes much of a difference. Like that's just something where you average down then. And I think the one thing to keep in mind, so like the absolute stop loss, in my opinion, would be at, what do we have the low here? At 11 cents, because if we touch that, then basically, yeah, there is no end to the downtrend. Earnings are meaningless. They don't have a product. It only matters that they will submit their product to the FDA. Yeah, of course, if they get an FDA approval, that would get the stock shooting up rapidly. But yeah, based on Elliott Wave Theory, I mean, there are just so many levels. So if we consider that this might be wave A, B, and C, on one hand, on the monthly chart, we bounce here on the maximum target for wave C, and we bounce on the 78.6 extension, which would support the idea that indeed we finish the corrective wave here and we get the next 1, 2, 3, 4, 5 impulse. On the other hand, that would mean that we would have to have here the next 1, 2, and there we now shot through the target levels. And since we shot through the target levels and pretty much are, what did we have the low here? 20.7. So like, yeah, it's like very, very close that we even touched that point. So theoretically, it's still possible that this turns into 1, 2, and now we get 1, 2, 3, 4, 5 for wave 3. But yeah, like just from the visual aspect of the pattern, I think considering how close we got here, it's more likely that we'll go through here as well. And the moment we would go below that, or at the 10.89 cent mark, or touch that one, would be the moment where this pattern also becomes invalid, and we don't have any valid pattern left then on the chart. So yeah. Moving on. Cost. Zooming out. So there we assume that this might be 1, 2, 3, 4. We're actually right now at the levels, still at the 61.8 level, so where we could expect, I mean, auto labeling suggests that there is still 1, 2, 3, 4, and wave 5 to come, so that wave C hasn't finished yet. I mean, they say wave C finishes here, but technically that there's still a push down. But on the other hand, we finish here nicely on the 61.8 expansion level for wave A, B, and C, so the minimum target for wave C, as well on the 61.8 retracement level of this upwards movement, which potentially is our third wave. So yeah, like that would be actually a level where an entry would make sense. Stop loss would, however, need to be down here at, what's the low? Low is probably here, 381. Yeah, 381 would need to be the stop loss in that case. So 50% risk, but on the other hand, like 100% or more than 100% upside if this is indeed wave 4. So, and even if we go lower, then it's just temporary risk, because then the fifth wave should make a new high. So actually, it's almost 150, 200% upside. So there we're just gonna hold on. Do we get a Nasdaq chart to load today, or a micro mini Nasdaq? Micro. Or not? Yes, we get. Do I want to zoom? Do I want to dare? I'm gonna try if we get a weekly chart to load. Actually, we would want to have a monthly chart, but yeah. I'm also gonna lower my desk real quick, so just gonna mute the microphone for a second. So there we go, or we don't go. Will you load? Will you not load? Come on. Come on, give me a weekly chart. Okay, give me no weekly chart. And we just look at the Nasdaq like this, and let's actually go to a monthly chart. I mean, it's not as, the monthly chart is still fine, but the lower charts obviously have the gaps for the overnight where we get data on the futures trading. And so what we can see, so what's possible, I'm not saying that it's likely or so, but it is possible that we're actually correcting now so that we start to, so that's kind of like the worst case assumption, that we're starting the correction of this. And if we start the correction of this, we see our first in quotes profit target or turnaround point would be at 6,500. So that's like 66, almost 70% correction that would develop. Obviously, we're looking at a monthly chart, so obviously would develop as a big A, B, C until over the next couple of years. Yeah, so like it's also possible because there is like more there that actually we're correcting even more. But yeah, then other than that, if we're not correcting this, then we can clearly see with the naked eye if we jump on a weekly chart. So bad idea. Now it works. So from the beginning up, we see that we have the high here, 21, and then we have the correction down here, which means here we have the start of a new impulsive wave. So that's in October 2022. Now let's throw the auto labeling on it and just adjust it. So not volume, auto wave. So 2022, and then just set it to September. Yep. So there we go. So auto labeling thinks we have finished wave 1, 2, and are currently in wave 3. I disagree with that. So let's get rid of the auto labeling. And I think we might be correcting that entire thing here. So, I mean, we already can almost rule out that we're correcting this here. It's still possible because we didn't go lower than this point. So it's still possible that this is the entire correction and we go up further from here. But considering that we would like to see something like an ABC pattern, I know now we're looking on a weekly chart, so the ABC could be hidden in there, and that we already retraced that far. So we see that we already went below the 78.6 retracement level. I think that we're actually correcting at least this, and where we will get an ABC pattern or potentially this, where we can see, so I mentioned yesterday when the chart wasn't loading that I expect the correction to go to 14 to 16,000. So it's this area here, because in my opinion, that here is wave 4. Maybe we can use Kennedy channeling technique here. So from the beginning, we labeled this, which is our potential wave 1, 2. And the moment we have the breakout here, we are in wave 3. Then we take our point 1 and whatever high point we have. So as the chart develops, we could, for example, take this candle here, we draw a parallel here, and if we have a breakout to the bottom, we would know wave 3 is over and we are in wave 4. That obviously doesn't happen. So next month we adjust, and we adjust, and we adjust, and we adjust. Then even here, when we are in July or June, we see there's no breakout to the bottom. So still not done until we reach the high point here in June 23. Again, make sure that the parallel goes through the point 2 that we have here. So the low point that we have here. And now we can see we have our breakout here to the bottom. And that qualifies as a wave 4. Okay, we'll check that later. So it qualifies as a wave 4. For the wave 4, we can add a trend line. That's our so-called deceleration trend line. And the moment we have a breakout to the top indicates we might be in the 5th wave. Also, wave 4 often, but not always, will touch the top or the median of the base channel. Sometimes it will touch, if we duplicate the channel and overlay them, so we basically get a 50 and 100% extension level. Oh, come on, I try to do it as good as possible. Sometimes it will only touch that top or that median. Yeah? I mean, sometimes it will not even go that far if we really had very, very strong movement before. So that's also worth considering. But the point is, we see here, first of all, we touched that 50% extension of that base channel, so basically 50% on top, and turn around here. Second of all, we break out through our deceleration channel, which then tells us, okay, we are potentially in the fifth wave. Now we don't need the base channel anymore, we don't need this anymore, and we can now, we can remove the retracement for now. We can now basically take our 0.4, our 0.2, and a parallel, oops, wrong thing, parallel through 0.3. And we get our profit target, which is the median or the top of that so-called destination channel. Now we see we basically creep along on that destination channel, then we have a drop and we creep along again. We don't reach the top ever, but still we basically hit our targets. Now, as for other confirmation, let's try if our usual suspects hit here. Actually, let's drag it a little smaller. So if we assume that this here is our third wave, and our fourth wave, then our profit targets look like this. And that's the minimum profit target. And we see we actually bounced from here, which would have given the assumption we are done here, especially since we already here had our median line of the destination channel. And we almost reached the 100% target line. So I assume, or I'm fairly certain, that we actually finished 5 waves up here. So from here, 1, 2, 3, 4, 5. We can also, let's do a little bit more exercises with our usual suspect. So if that's our wave 1, one can argue wave 1 might stop here or might stop here. So that's a little bit up to debate. Either we have a flat corrective pattern in here, that's why we have a new high, or we have it here. And we see that very often wave 3 turns around at the 2618 extension level. It went a little bit through here, we see that, but it's still roughly the right level. And we see that Kennedy channeling technique tells us here's the wave 3, because then we have the breakout to the bottom of the acceleration channel. We see that it hits the usual suspect, the 2618 level, and bounces from here, which again also points towards this being wave 4. And we then see for wave 5 that we actually hit our minimum target and almost the maximum target for wave 5 before we turn around. And it all points towards the Nasdaq now correcting all of this. And if the Nasdaq is correcting all of this, while there is also, what's it then? 21.4, yeah. So there's also 21.4 level. But it's not in my template because it's just so rarely that this is the endpoint. That's why I usually don't have it in the template at all. The most common corrective turnaround point would be the 38.2 or 61.8, sometimes the 50. Yeah. Now, if we would know in the bigger scheme of things, if this is a wave 1, wave 3, or wave 5, then we could also make a little bit better a prediction of where we think it will go. But I think it doesn't matter much, to be honest. The core point is that I think the correction here is not done, and that from here down, we start a corrective pattern. Corrective patterns are horribly to label, at least for me. I mean, there are people out there that are very, very good at it. But even the best, the people from Elliott Wave International sometimes get it wrong because they thought we had the top here and expected an A, B, C here. And then we turned around here, which was kind of like, okay. And then it already made the appearance that we're going further down, but then we got the push up. So even the people that wrote the book sometimes get it wrong by an astonishing almost 4,000 points. So corrective patterns are really the challenge in Elliott Wave Theory. Now, however, if we work our way down, so now we know that here correction starts, and we know that we expect to go down from here to around 16,000, potentially 13,500. There's also the rule that a corrective wave, so a wave 2 usually, or a wave 4, would finish in the area of wave 4 of the previous impulse wave of the lower degree. So if we label this, if this would be wave 1 and wave 2, so wave 2 in progress, yeah, then if we then subdivide the first wave, so again, which according to Kennedy channeling technique looks something like this, then the previous impulse wave, so if we try to determine how far we go here, the previous impulse wave is this wave 1, and the lower degree is the subwave 1, 2, 3, 4, 5. So a correction often finishes in the area of wave 4 of the previous impulse wave of a lower degree. And surprisingly enough, that wave 4 coincides exactly with the 38.2 and the 61.8 retracement, or I mean, exactly with 38.2 and almost exactly with 61.8. There's a little gap here, yeah. So yeah, so it really looks like we are heading towards 16,000, potentially further. Obviously, in between it can go up. So question is, how long will it take us to get there? I mean, it took us basically 2 years or 1.5 years, yeah, almost 2 years to go here. So it's possible that this pattern develops over 2 years as well. So if we would want to trade that as options, we would need to get XND is the one we could afford, yeah. And we would say we go down to 160, or actually, let's quickly fire up option strat. Again, also link down below, and optimize, and we say XND, and we say 160 buy, and we say what's the longest expiration that we can get? January 25. Yeah, that's not too far away, so that doesn't really help us. So if we say maximum return, doesn't really offer an options trade that pays off. If we say NASDAQ itself, there the options are just more expensive. That's a little bit of the problem. So if we take the NASDAQ and we say 16,000, however, there we might have longer expiration, so we can take December 2026, and for a maximum return, yeah, so that would be a trade, but you can see that the overall risk, if we're wrong and it goes above 20,000, would be an astonishing 180,000. But I think the payout would still be good. I mean, not that I can afford it because of the margin requirements and so on, yeah. But I think the payout would still be good. As the whole thing develops, I mean, we can see that basically if already, let's say in January this year, so if we would have a fast crash and in January we would already be at 16,000, then it basically, what did we say the collateral was? 160,000, yeah, so it's like a little bit less, so like 40% profit for a couple of months. On the other hand, if we recover from here, we can see that as we go up, that the loss is staggering really, really fast. Yeah, and in the XND, we have the problem that we don't get a trade like this, yeah, so we cannot pick the expiration far enough. So, and basically, if we just take a put option, so like just build long put XND from now, how does that pay off if we go to 160? So the option costs 1,000, then it pays out 1,000 if we reach 160. So it's not worth the trade. So it's like 1-to-1 payout ratio. I think the smart play. So we can try to label this. Again, I think this is at best wave A. So we can try to zoom in on a daily chart, but there we already have data gaps because we don't have the overnight data of the futures market visible here, which makes it harder to actually discern the pattern. But if, yeah, let's try as good as we can, yeah. I mean, maybe we finished wave A downs, or not extension. Maybe we finished wave A down. So we shoot through the 2618. We actually only really bounce at the 6618. And on the other hand, tricky. It's possible that this is basically 1, 2, 3. Now we're getting wave 4. And then we get wave 5 down to finish wave A. It's also possible that this is already the entire wave A, so it's honestly like a little bit challenging. I think we would have to keep an eye on where we turn around here. So if we, I mean, obviously we could just resume the journey down, but if this develops into an ABC pattern that turns around at 18.6, 19, or 19.4, yeah, 19.4 seems already too much because we would have to recover too much. Although that would be, again, the area of the wave 4 of the previous impulse, 1, 2, 3, 4 of a lower degree. So within there, so within 19,000 and 19,380. So if we recover A, B, C up till somewhere here, that would probably be then an entry or an area where we could consider buying a put option, although it would need to be relatively long dated if we really want to benefit. On the other hand, shorter dated would be cheaper, but then we risk, I don't know, like, yeah, we'll have to keep an eye on that. I mean, that much about the NASDAQ. Now we had Novax that hit the 1019 mark, so the potential ABC, or actually 50% retracement, and for an ABC, we again apply our usual, where's the low? 1169, 1168, so that's the low, yeah. We went a little bit through, so, but yeah, like, I mean, we're looking at the daily chart, so 1, 2, 3, 4, 5, 1, 2, 3, 4. Here we retraced 78.6, which means we don't have a good indicator. Visually, that really, I mean, that could be 1, 2, 3, 4, 5, but wouldn't make sense as a pattern, so it would need to be ABC. And then if we zoom in a little bit more, do we at least hit the minimum? Yeah, we do. Yeah, we do. We hit the minimum target for that to be ABC. And now we potentially finish the corrective pattern down here. And still room down into the area of 768 or $8, so in that area. But I think right now, again, just my opinion, don't bet your house on it. Right now, it would be a reasonably good entry point here. Stop loss, however, would need to be at 381, so we have 60% risk. The upside, on the other hand, would in that case be a little different. The upside in that case would be, if we are right, and this is indeed already wave 4 finished. So the first target would be at 29, which would be a 200% increase almost, and the second target would be at 60, which is a 500% increase. So I think risk reward still checks out. So unfortunately, we don't have spare funds right now to throw into that. NVAX, we can check, but options are probably also not going to be, if there are even some NVAX. Oh, there are options. Okay, so if we consider January 25, okay, it would be $100 to do that. So let's circle back. So if that is indeed the end, then from here, that was June to August, July, so 2 months till here. April, May, June, 2 months till here, a little bit longer here. Here we had February, March, April. So we talk about 2 to 6 months here. So if we go with 2 months from now, end of October, if we again fire up option strat, NVAX, and we'd say 30 would be the target. 29, yeah, so 29. Okay, October is very soon. January. There, just a long call. So the $20 long call has $85 risk and pays $800 profit, if I'm right. So I think that makes sense here. If I get the shares instead, if I get $80 worth of shares, so $80 worth of shares divided by roughly 10, so 8 shares, and 8 times then 30. So obviously way less profit. So we can buy the $20 long call that expires on January. So January 17th, was this the right one? A long call. January 17th, $20 long call, okay. Wait, what, something's off here. So here it says, no, that's fine. That one obviously is some median, so no, not sell, buy. Buy, yeah. So $90 premium for the NVEX long call. Now I'll just have to update my option strat on the other side. Save trades. So build long call NVEX January 17th, $20, and we paid 0. Oh, it didn't trigger yet. Okay, never mind. So let's pay 90 then if it has to be.
Order filled.
Really doesn't make a difference. So we paid 0.936 for that long call. We saved that trade and a few safe trades. Okay, so it's added there. Good. And with that, we dealt with the NVEX alert. Now, obviously, I'm a little bit in minus fund-wise. Which means we're going to actually buy back our GameStop calls. Yeah, let's bid ask. Yeah. Let's buy them back for that. So we closed that out, and now we can, for GameStop, for next Friday, sell the $30 calls again. Not buy it, but strategy builder. Sell 5 pieces.
Order partially filled.
So we closed out our August 9th calls. Let's close position, just a second. Close trade. And we closed it out for 0.3. Yeah, so yeah. Close trade, and then we opened covered call, GameStop, again $30, and this one for August 16th. And it's 5 pieces, and we got 0.16 for them. And then there we have our 500 shares as a counter to it. Yeah. Let's save that trade. And now we have, yeah, exactly those 3. So the August 16th $30 covered call, the January 17th $20 long call in NVEX, and still our grab call that's also long. Okay, so, and with that, we basically can balance out the open balance, the transmit. So, and that's that. It'll be interesting to see, because I said, I mean, it will not make a fortune, but again, it would pay off like $800 here, if I'm right, at least. So, and again, we now have time till January. Well, we expect it already to might be, yeah, October, but it could take longer. But even if it takes longer, the point is it would already mean, if I'm right, we already would have upwards movement, even if we don't reach that, which should still increase the value of the options. So that's NVEX. NVIDIA, we didn't check today, I guess. Yeah, so there we still wait. I think, as said, I think that we will get to see maybe touching of this, maybe touching of the median for finishing 1, 2, 3, 4, and then we get our push to wave 5. SunPower, yeah, again, no bullet pattern anymore, so we'll just wait to see what happens. Auto labeling says it's doomed, but we'll see. SPY, I think, yeah, like auto labeling suggests ABC, ABC, and then followed by wave C down. I think it might be 1, 2, and now the next 1, 2. So that would need to be adjusted. So did we get here? I mentioned yesterday that between 530 and 544 would already be the way to enter. So yesterday actually getting puts would have paid off if one is in front of the chart to actually yeah, like cash them out. Yeah, I still think we might see the 536, 538 mark here. That would fit with an ABC pattern like this. And then we go down from here. Yeah, so that's that. Now, the last thing I want to actually check is from all the stuff that we have, is there something else where we could sell options? FIVE doesn't make sense, although our average is at, would we get like a decent premium by now? I mean, we have a pending, no, we don't have a pending order anymore. So I canceled it, yeah. So misclicked probably. So we have like a $80 investment in FIVE. So, but we could basically sell 2, for example, $1 calls. But they are really long term to get like an astonishing $12 in premium, so $24. What's shorter term here? So in August, I mean, there's no premium whatsoever. Also no premium whatsoever. August 30, also not. So if we say November this year, yeah, also not really worth it. January. So we have 2. Yeah, let's just write those calls. So I mean, if it shoots up, then we get out. If not, we at least reduce our average a little bit further. So by pocketing minus commissions, another $12 or $10. So then also we'll have to add that. So covered call. That's then FFIE, Faraday Future. And our expiration date for those is now also January 17th. And we sold the $1 call. And we sold it for 0.06. We sold 2 of them, and our shares, we have 200 shares that we got technically at 0.75 technically. Actually, yeah, 0.75 is the average if we don't consider the premium. So yeah, so safe trade. Okay, so that's that. And then SunPower, yeah, there our average is just through the roof. So there we have 200 shares times 2.342, so 468. But are there, how about January? Yeah, that's really not worth it. I missed it. You bought the NVAX call. Yes, I bought. Yeah, true. Implied volatility is still high, and the option premiums is therefore also a little bit higher. But even so, like, of course, waiting a couple of days, maybe there's no strong movements and the volatility drops down a little bit, and then I get that call cheaper. But then I have to remember that I actually want to look at it. Or if I'm right, we already start our movement slowly upwards, and it anyway costs more because, well, the volatility might be lower and the time is a little bit less, but the price would already be higher. And like with $80 or almost close to $90, it's like not really a huge amount that I risk on it now. So where if I would have gotten it cheaper for $50 or so, it really, yeah, doesn't make much of a difference to me here. So as under the assumption that it should go to at least 29, 21, and considering the previous time frames that we have like 3 months or 2.5, 3 months, 2.5, 3 months, 2.5, 3 months, so that one should be similar. Yeah, but I mean, to be fair, you know, if I would have or if I would make more time for trading so that I actually can monitor the charts longer, then I would actually obviously wait in such cases or set a pending order for a lower premium that I hope that triggers and whatnot. But with the limited amount of time that I dedicate towards managing the portfolio, yeah, sometimes you have to enter a little bit worse or yeah, like, I mean, in the end of the day, if I'm right and we go towards 30, so even if it doesn't reach 30, but it reaches 25 or so in 2.5 months or so, the option is still going to print, just not as much as it could. Yeah, if it would have been an option for $300, $400, $500 or so, it would also be a different thing. But for $80, I think like it's an okay risk. I survive if we lose the trade. So if I'm wrong and it goes further down, and I'm also okay if it and if the payout is not as big as it could be, also fine as long as it's a profitable trade in the end. Yeah. So exactly. Yeah. Now for SunPower, so theoretically said our average is 234, but there are no reasonable options. I mean, there are people asking for huge prices, but we can also see that there's no volume for many of them. Yeah, so no calls there to write. Cost doesn't have options here. NEO, we don't have 100 shares. So yeah, so I guess that's it. With that, we pocketed a little bit of premium. On the other hand, we closed out one trade, maybe right, maybe not. We'll see. Time will tell. Probably could have waited a little bit because it might have recovered a little bit before it might go further down or so. So, and we basically already rolled our GameStop calls into next week. So, yeah, now one thing we can do. Save that now. No, okay, it's hard to. It's a pity, like, I mean, like, while options trade is great to map out potential option trades and get ideas for like what might be the best play if you have a certain opinion where the price will move. They don't really offer a great interface for keeping track of. I mean, for keeping track of your active options, yes, but there, for example, with the covered calls, it's also tricky because it considers the profit loss of the stock as well, which might not be accurate depending on the inputs. So it doesn't just show you, okay, the option premium you earned, and there's no such thing as a, like, I would love to have an interface where, for example, click on GameStop and it just sums up everything for whatever time period I've selected. So how much premium I earned, what I actually paid for the shares and what's the net result, and not shows me something like this, which technically isn't really accurate, because on that trade I actually earned, oh, that's the active one. On that trade we actually now made, what was it, $60, $70 or so in premium, $80 in premium overall, and only because the value is right now here, it considers this loss, which we actually don't have because we already had the shares. Yeah. So now, yeah. So it's a pity that it's like that there is nothing like that. Yeah. So, and the expired closed view, there is no kind of summaries and so on. It's also hard to really have a nice, okay, overview. Okay, in this stock, my position looks like this. And in Interactive Broker, they obviously consider the premium when your put option triggers. So that's why it says our average here is 24.12 when it actually triggered through a $30 put option. But it only considers the option that triggers. So if we write 20 other options that all expire worthless, where we pocket the premium, it does not affect the average. And which I personally think is like, I mean, from a tax perspective is one thing, but from a like keeping track of your trades perspective, it would be nice if it considers all the premiums that you received already, and it shows you your average price per share that you paid considering all the premiums. Yeah. But yeah, anyway, I think that's it for today. I think we covered everything. So the big things. So yeah, it's going to be interesting to watch the NASDAQ. Maybe we are able to free up some funds in the next couple of weeks to actually trade it short. I think their asset will be months of pain ahead. So at least based on retracing this, if not retracing the even bigger pattern. And so might expect, yeah, something not as big as this, but yeah. And it's going to be interesting for NVAX to see how it turns out. It's a pity that for no, it turned out not as we expected. I mean, there's still hope technically that pattern as 1-2 is still valid, but for my personal taste, in my experience, every time I traded and I ignored and was like, okay, theoretically it can move 99%, and I held on to my position instead of getting out, every time I got burned. So like I cannot recall a single situation where if I have the opinion that this is an impulse and that is the corrective wave, where it visibly jumps through even the 78.6 level instead of just maybe briefly going through or barely touching it or so, where it then did not continue the journey that way. Yeah. So I mean, there's a first time for everything, but based on just my experience over the last couple of years, every time the pattern plays out like this, it just turns out that I was wrong, that this is then not an impulse wave, and that we will get a further push. Anyway, gonna call it a day now. Still have a few other things to do. Thanks, Olga, for stopping by. Thanks as always for your input. I hope for your sake that I'm wrong here with that assessment. But again, even if I'm wrong, even if I'm right here, then there's still the pattern 1-2. And then the question is just this, like, how far do we go here before that potentially finishes? The only real final end would be at the 10-cent mark. So if we touch that, the 10.89, then this pattern is invalid as well. And then who knows where the bottom is. Yeah. And yeah, so thanks for stopping by. Thanks for interacting a little bit. I wish you a pleasant day. I also wish the lurkers a pleasant rest of the day. And then we'll likely see each other tomorrow again around 5 minutes before the market opens. And yeah, that's it. Till then, bye-bye.